Hey everyone, in today's video I'm excited to share with you all the big tax changes that were recently passed in the One Big Beautiful Bill. This bill was officially signed into law on July 4th, 2025, and it contains some of the biggest changes to our tax code since the Tax Cuts and Jobs Act was passed in 2017. Topics covered in this video include increase in the child tax credit, no tax on tips, no tax on overtime, charitable tax deduction for non-itemizers, auto loan interest deduction, expanded eligibility for health savings accounts, Trump accounts for child savings, additional deduction for seniors, increase in the state and local tax deduction, and changes to qualified business income deduction. As you can see, this video mostly focuses on changes that affect individual taxpayers, not businesses. I'll also provide timestamps in the description in case you want to jump around, so let's hop right in. The first topic is the child tax credit. The child tax credit previously had a maximum credit of $2,000 per child and was set to expire at the end of 2025. When this new bill, the child tax credit has now become permanent and increased to $2,200 per child. It will now also be indexed to inflation, which means it'll gradually increase each year. Here's a screenshot of the changes to the child tax credit in the final version of the bill. Feel free to pause the video. Next up, we have no tax on tips. This change allows up to $25,000 of tip income to be deducted for individuals. This deduction only applies to tax years 2025 through 2028. The deduction is phased out once taxpayers' modified adjusted gross income exceeds $150,000 for single filers or $300,000 for joint filers. For federal tax purposes, qualified tips means tips received by an individual in an occupation which customarily and regularly receives tips. Here's a screenshot of the no tax on tips section of the bill. Next up, we have no tax on overtime. This change allows up to $12,500 of qualified overtime compensation for individuals to be deducted, or up to $25,000 for joint filers. This deduction only applies to tax years 2025 through 2028. This deduction starts to get phased out once taxpayers' modified adjusted gross income exceeds $150,000 for single filers or $300,000 for joint filers. For purposes of this bill, qualified overtime compensation means overtime compensation paid to an individual required under Section 7 of the Fair Labor Standards Act of 1938 that's in excess of the regular rate, and here's a screenshot of the no tax on overtime section of the bill. Next up, we have the charitable tax deduction for non-itemizers. In previous years, taxpayers could only deduct their charitable contributions if they itemized their deductions. And since less than 10% of taxpayers itemized deductions, this meant that they could not deduct charitable contributions. This new bill now allows you to deduct up to $1,000 for single filers and up to $2,000 for joint filers on charitable contributions, even if you don't itemize. This change starts in tax year 2026, but then becomes permanent from that point forward. Here's a screenshot of the so-called permanent and expanded reinstatement of partial deduction for charitable contributions of individuals who do not elect to itemize. And I promise I did not come up with that name. Next up, we have no tax on car loan interest. For tax years 2025 through 2028, individuals are allowed to deduct up to $10,000 for qualified passenger vehicle loan interest. This deduction starts to phase out when taxpayers' modified adjusted gross income exceeds $100,000 for single filers and $200,000 for joint filers. Please note that this deduction does not apply to vehicles purchased for business purposes or vehicles which are leased. The vehicle must also have final assembly in the United States and weigh under 14,000 pounds. Here's a screenshot of the applicable no tax on car loan interest section of the bill. Next up, we have expanded eligibility for health savings accounts. For tax years starting in 2026, bronze and catastrophic plans are now treated as high-deductible health plans. This means that individuals with those plans are now eligible to participate in health savings accounts. As a CPA, I personally love health savings accounts and think they provide some incredible tax benefits. Here's a screenshot of the allowance of bronze and catastrophic plans in connection with health savings accounts. Next up, we have Trump accounts for child savings. For children born between 2025 and 2028, they will receive a $1,000 deposit into a tax-advantaged savings account funded by the federal government. Parents may also make an additional contribution up to $5,000 per year. These accounts can then be invested in eligible investments only, meaning any mutual fund or ETF which tracks the return of a qualified index, does not use leverage, does not have annual fees and expenses of more than 0.1% of the balance of the investment in the fund, and meets other criteria as the Secretary determines appropriate for purposes of this section. Qualified indexes for the purposes of these investments include the Standard & Poor's 500 Stock Market Index, or any other index which is composed of equity investments in primarily United States companies and for which regulated futures contracts are traded on a qualified board or exchange. I plan on making an entire separate video on these new Trump accounts, so please subscribe if you're interested in that type of content. Next up, we have the additional deduction for seniors. For taxpayers aged 65 or older, they are now eligible for an additional $6,000 deduction through 2028. This additional deduction starts to get phased out once taxpayers' modified adjusted gross income exceeds $75,000 for single filers and $150,000 for joint filers. Here's a screenshot of the temporary senior deduction. Next on our list is the increase to the state and local tax deduction, also called SALT. In previous years, taxpayers who itemized were able to deduct up to $10,000 of state and local taxes. Well, this bill now allows taxpayers to deduct up to $40,000 in state and local taxes for tax year 2025. And then in 2026, you can deduct up to $40,400, and then an inflation-adjusted amount thereafter, until it reverts back to the $10,000 maximum in 2029. This deduction starts to get phased out once a taxpayer's modified adjusted gross income exceeds $500,000. Here's a screenshot of the bill on the temporary deduction for state and local taxes. Last but not least, we have the extension and enhancement of the deduction for qualified business income, also called QBI. The qualified business income deduction was set to expire at the end of 2025, but it's now become permanent. They also expanded the income phase-in thresholds, raising it from $50,000 to $75,000 for single filers and from $100,000 to $150,000 for joint filers. Here's a screenshot of the section from the bill. So there we have it. There's a summary of all the major tax changes for individuals in the one big beautiful bill. This video took a lot of time to research, so if you found it helpful, please do me a favor and hit that like button, as it really helps out the channel. Thanks so much for watching, and I'll see you in the next one. Take care.